Now speaking, Samir Shah, Global Head of Investor Relations. Good morning and good afternoon, everyone. Thank you for joining our webcast and investor call. We have a lot of important information to share with you today. Our company statement contains forward-looking statements that involve known and unknown risks, uncertainties, and other factors that may cause actual results to be materially different from any future results, performance, or achievements expressed or implied by such statements. We will be discussing our most recent quarterly results on Form 6-K that were filed with and furnished to the U.S. Securities and Exchange Commission. During the Q&A session, we ask that you limit yourself to one question per analyst, and we aim to finish today at 1:15. Now, let's get started. Now speaking, Vas Narasimhan, Chief Executive Officer. Novartis delivered strong sales growth and excellent margin expansion in Q2, allowing them to raise their full-year guidance. Group sales grew 9%, core operating income up 17%, and in margin up to 39%. Innovation milestones included a ruling from the district court regarding one of their patents for Entresto, their combination patent. Entresto delivered strong double-digit growth in all geographies, with 38% sales growth and 17% NBRX growth in the U.S. Cosentyx sales stabilized with 1% growth, and Kisqali had 66% growth globally. Kisqali's NBRX share in the U.S. has climbed to 34% on the 3-month rolling, and it is included in the NCCN guidelines as the only Category 1 treatment for first-line metastatic breast cancer with an aromatase inhibitor. Now speaking, Vas Narasimhan, Chief Executive Officer. Highlighting our NATALY results, which demonstrate the potential benefits of Kisqali in a broad population of Stage 2 and Stage 3 early breast cancer patients. We saw consistent results across IDFS, RFS, distant disease-free survival, and OS, with no new safety signals. The 400 mg dose was well tolerated with limited need for dose reductions. We are pursuing a broad label reflecting the intention to treat population studies in NATALY, which could more than double the number of patients who could benefit from a treatment with a CDK4/6 in the early breast cancer setting. Kesimpta also had an outstanding quarter, doubling sales versus prior year. Sales were up 105% US NBRX, 80% TRX in the US, and 43% NBRX. Our B-cell NBRX share is currently 54% of the market. In Europe, 24,000 patients have been treated. Pluvicto continued its strong performance, with Q2 sales of $240 million. Milburn was approved for the US, and Saragossa was approved for the EU as sites for commercial supply of Pluvicto. We are ramping up additional lines in Milburn rapidly, and we are pursuing filings in the EU in Q3 and US in Q4. Leqvio launch continues to progress steadily, with sales reaching $78 million globally. We now have 2,600 facilities that have ordered Leqvio, and we have achieved a label expansion in the US, which expands Leqvio to patients with primary hyperlipidemia. Scemblix sales were strong in the quarter, reaching $106 million. We have completed enrollment for the ASC4 first-line registrational study, and we expect the readout and filing in the early part of next year. Our key 2023 readouts are on track, including Kisqali, Pluvicto, and iptacopan. Now speaking, Harry Kirsch, Chief Financial Officer. Good morning and good afternoon, everyone. Our company has had a very strong first half of the year with sales growing 8%, core operating income increasing 16%, and core EPS growing 25% to $3.54. Our innovative medicine sales grew 9%, driving an increase in core operating income of 20%. Core margin improved 340 basis points versus prior year for the quarter, reaching 39%. Zondas net sales grew 8% for the quarter, mainly driven by Europe and the biosimilar business. Core operating income was up 6% with the core margin up 18% for the quarter. Novartis, excluding Zondas, grew 9% top line and 19% in the bottom line for the quarter, with a 300 basis point growth in the core margin, reaching 37.7%. We have substantial cash generation, which we aim to distribute across both our priorities of investing in the business and returning capital to our shareholders. We have one of the largest R&D budgets in the industry and have spent $43 billion on R&D from 2018 to 2022. We also have a strong and growing annual dividend in Swiss francs per share and have undertaken regular share buybacks at a reasonable level. We have today announced a continuation of our previously completed share buyback program in June with a new up to 15 billion share buyback, which we expect to complete approximately by the end of 2025. We have raised both top and bottom line guidance for the full year of 2023, expecting sales to grow high single digit and core operating income to grow low double digits to mid-teens. For Zondas, we expect sales to grow high single digits and core operating income to grow low double digits. We have built a strong leadership team around Richard with decades of generic industry experience and a strong pipeline with small molecule generics and biosimilars. The planned spin-off is well on track and the extraordinary general meeting will take place on September 15. Now speaking, Vas Narasimhan, Chief Executive Officer. Thank you, Harry. Our company demonstrated strong business momentum in the quarter, with robust sales growth and margin expansion across TAs and geographies. We remain confident in our near and midterm growth profile, including our pipeline of Kisqali, Pluvicto, iptacopan, as well as the continued performance of our other launch brands such as Kesimpta and Leqvio. To demonstrate our confidence in our outlook, we are raising our 2023 full-year guidance and initiating a $15 billion share buyback. We are also on track for the Zondas spin-off in early Q4 2023. JP Morgan Chase & Company analyst Richard Vosser inquired, what is the status of Entresto's discussions with the FDA regarding the citizen petition and generic forms of the product? Vas Narasimhan replied, thanks, Richard. Regarding citizen petitions, we filed them and are now awaiting the FDA's decision. There are two relevant petitions, one on the nature of any potential generic and the other on labeling and dosing titration. We believe a generic must be an exact match to Entresto and that the label should reflect our dosing titration and indication statement. The FDA typically rules on citizen petitions before taking action on generics. As of now, there are no approved or pending approvals of generics. Credit Suisse analyst Joe Walton inquired, could you provide more detail on Leqvio's repositioning, reordering, and European rollout? Vas Narasimhan replied, thanks, Joe. We're seeing a steady expansion in the number of facilities and physicians ordering Leqvio. Once they reach 4 to 5 patients on the medicine, they tend to expand their practice. We're focusing on increasing depth among those prescribers. We have good coverage at over 75% at label. It's a step-by-step process to get them comfortable with the buy and bill process. We expect a steady trajectory through the second half of the year. In Europe, we're seeing good performance in the private markets. In the UK, there are additional programs to incentivize physicians to get their patients to goal for cholesterol, which is helping the rollout. We're also working toward approvals in China and Japan, which should further help Leqvio's growth in the medium to long term. Deutsche Bank analyst Emmanuel Papadakis inquired, could you provide an update on Pluvicto's PFS, how it may reflect OS trends, the supply situation for H2 and beyond, and any thoughts on differentiation from competitors? Vas Narasimhan replied, thanks, Emmanuel. Pluvicto continues to see strong demand and we're actively promoting it. We expect over $1 billion in sales. For PSMAfore, we had a clinically meaningful, statistically significant readout in our PFS and are awaiting maturation of OS. We anticipate a potential tripling of demand for the product in a given center. We're continuing to pursue Pluvicto in other markets and investing in our broader pipeline. We believe our key differentiators will be experience with Pluvicto and our supply chain, enabling confidence in the supply. Barclays analyst Emily Field inquired, what is the company's commitment to the cardiometabolic space, particularly in regards to obesity, given the existing cardiovascular infrastructure? Vas Narasimhan replied, thanks, Emily. The MBL program did not have a compelling overall profile, so we've stopped it. We do have earlier stage efforts in obesity and metabolism, but they are far from reaching the commercial marketplace. Our focus is on cardiorenal. We have Entresto and Leqvio, pelacarsen, XXB for hypertension and heart failure, antiarrhythmic agents, and Cernas to reduce cardiovascular risk with less frequent therapy. On the renal side, we have iptacopan, the proposed acquisition of Chinook, and efforts to treat a range of renal diseases. That's where we'll be focusing in the years ahead. Next question, operator. Bank of America Merrill Lynch analyst Graham Perry inquired, can you confirm that the 938 Delaware MDL litigation has been settled ahead of ruling, which filers were involved? And how are the 938 and 134 crystalline patents being asserted against those filers that were successful in the 659 ruling? Is there still a scenario where generic Entresto doesn't launch until November 2027 or later, or do you now see that as off the cards in the latest that you could protect this being mid-2025? Vas Narasimhan replied, thanks, Graham. The Entresto situation is complex due to the different patent infringements and citizen petitions that each generic filer has. We have settled the 938 patent with Crystal and other generics, and are focusing on appealing the district court ruling for our remaining patents. Our forecasting guidance remains unchanged at mid-2025, and we are confident in the outlook of the brand as no generics have been approved in the last 15 years. Next question, operator. Is your line on mute? UBS analyst Michael Leuchten inquired, Mike from UBS, what factors are preventing the top line from gearing as much in the second half as it did in the first? Harry Kirsch replied, Michael, thank you for your question. Novartis, ex-Zondas, is expected to experience a slight increase in COGS due to inventory being used over the next 6 months. We began to see the transformation for growth savings in Q4 last year, which makes for a more difficult comparison. Sales continue to have strong momentum and we anticipate a 340 basis points improvement in the bottom line. However, this may not happen every quarter or year. Zondas P&L will be impacted by higher COGS, lower gross margin due to inflation, and stand-up costs in the second half of the year. Overall, Novartis, ex-Zondas, should continue to perform well with slightly less margin leverage than seen in the first 2 quarters. Wolfe Research analyst Tim Anderson inquired, what cost levers can Novartis pull in the event of early and at-risk generic launches for Entresto, and how would that affect the company's M&A strategy? Vas Narasimhan replied, thanks, Tim. We remain confident that generics will not launch at risk due to the potential for trouble damages and the strength of our case on appeal. We are still on track to hit our 4% sales and 40% margin guidance for the company, excluding Zondas, as previously outlined. Our 5-year CAGR outlook and 40% margin outlook already assumed that Entresto would move out in mid-2025, so no additional cost-cutting is necessary. Our transformation and procurement programs will enable us to reach our midterm goals. Harry Kirsch replied, I believe the majority of our marketing and sales efforts are focused on other growth drivers, which have significant potential. We are defending our IP and driving our full portfolio, including Entresto, to ensure we don't have any distractions. We are ahead of our restructuring cost savings goals, which is reflected in our bottom line numbers. Morgan Stanley analyst Mark Purcell inquired, could you explain the importance of showing a strong trend on overall survival in the PSMAfore trial, given the FDA's tougher stance on OS benefit in prostate cancer? How does the PFS benefit in patients progressing on an androgen receptor pathway inhibitor being re-randomized on alternative ARPI, as opposed to being moved on to a taxane in the control arm, affect the relevance of the OS benefit? Vas Narasimhan replied, Mark, our trial is designed to show no detriment to overall survival and a compelling benefit in progression-free survival. We anticipate crossover in the study due to the limited treatment options available to these patients. Our current expectation is to demonstrate no detriment to overall survival, and potentially a positive outcome. As the study matures, we will need to account for crossover in the analysis. Berenberg Capital Markets analyst Kerry Holford inquired, what are your expectations for Kesimpta as we head into next year and beyond, in light of the new subcutaneous competition from Roche's OCREVUS? What is the risk of losing share to OCREVUS as a less frequently dosed subcut option? Vas Narasimhan replied, thanks, Kerry. Our expectation is that the competitors in the market for 4-administered or subcu pump-administered medicines in the Part B setting will compete with one another. Kesimpta has an outstanding efficacy and safety profile and is preferred by physicians who treat their patients with at-home administered monthly medicines. We are prepared if our competitors move into the at-home subcu administration space, but we feel confident in the Kesimpta profile. It takes only a minute to administer and does not require pre-administration or pumps, which is greatly valued by this patient population. We are aware of the competition, but we remain confident in the outlook for Kesimpta. Cowen and Company analyst Steve Scala inquired, is Novartis confident that the $15 billion share repurchase will be completed by year-end 2025, even if a generic Entresto were to launch tomorrow? Vas Narasimhan replied, Steve, our $15 billion share buyback is independent of any business scenarios, including Entresto. We have a long-term view that we have adequate capital to pursue our internal investments in external M&A and BD&L. We're confident in our growth outlook and believe our share price will appreciate, so it's prudent to buy back our shares and return capital to shareholders. We also believe we're undervalued versus our potential. We can't exclude a generic launch, but we have a compelling case with respect to appealing the district court ruling, a range of other patents that go out to 2027 or 2036, and various citizens' petitions with the FDA. We maintain our guidance that there won't be Entresto generics in the U.S. before mid-2025. Guggenheim Partners analyst Seamus Fernandez inquired, can you provide an update on the FDA's request for preliminary data or ongoing clinical trials regarding the potential risk of liver injury with BTK? Vas Narasimhan replied, thanks, Seamus. We have enhanced liver monitoring in our multiple sclerosis and CSU programs, and to date, we have not seen any liver signals placed on clinical hold. We believe this is not class-specific to the BTK target, but specific to the design of individual molecules. Our chemical structure is different than other BTK inhibitors, which is why we think it has a unique safety profile. We look forward to initial efficacy readouts in CSU in the second half of this year, which will enable us to file in CSU and get a first label in immunology for remibrutinib, followed by multiple sclerosis and other immunology indications. Intron Health analyst Naresh Chauhan inquired, what is the expected sales trajectory of Hyrimoz over the next 18 months, given its importance to Zondas? Vas Narasimhan replied, thanks, Naresh. The launch of Hyrimoz is still in its early stages. We've seen multiple competitors enter the market, including Zondas. We anticipate a gradual increase in sales as we secure favorable positions with payers and build the necessary infrastructure for launch. We believe this will be a significant contributor to Zondas US and global biosimilars growth in the long run. Harry, do you have anything to add? Harry Kirsch replied, "Thank you, Naresh. It is too early to discuss peak sales and other metrics at this time, as the launch is just beginning. We are on track to secure formulary positions, and our U.S. team is actively working to ensure a successful launch. Over time, we anticipate that this product will become a significant contributor to our growth." Jefferies analyst Peter Welford inquired, "Could you please provide some insight into your capital allocation strategy in the $15 billion buyback? Are there any divestments related to this, and how far along are you in focusing on core therapeutic areas?" Vas Narasimhan replied, "Thanks, Peter. We've been very focused on capital allocation over the past few years. We've divested non-core assets, such as our consumer health business and our stake in Roche, and we've streamlined our therapeutic areas to 5 core areas. We've also proposed a spin-off of our Zondas business. All of these actions have been taken to focus our resources on driving strong operational performance and pipeline growth. Our goal is to achieve 4% sales growth and a 40% company margin by 2027. We will continue to focus on capital allocation to ensure that we are making the best use of our resources to reach our goals." Harry Kirsch replied, "Peter, our mid- and long-term liquidity planning is a continuation of our responsible capital allocation strategy. We have $6 billion remaining from the Roche stake, and debt pushed down to Zondas that covers the majority of the $15 billion. We also have strong cash flows and flexibility for executing our bolt-on M&A and BD&L strategy. Our net debt is $15 billion, which is below 1x EBITDA, and we plan to continue share buyback and a growing dividend in Swiss franc per share for Novartis, ex-Zondas." Citi analyst Andrew Baum inquired, "How does Leqvio protect against Medicare price negotiation, and what percentage of the Victorium 1P trial population is outside of the Medicare patient population?" Vas Narasimhan replied, "Thanks, Andrew. Our strategy with Leqvio is to advocate for moving the 9 to 13-year period as an industry and as a company. We also advocate that SERNAs and related therapeutics were never intended to be part of the 9-year period. We believe V2P, with its longer follow-up, will show a compelling cardiovascular risk reduction of 25 to 30%, which could merit a price premium in negotiations. V1P data will also be compelling, with the majority of patients being primary prevention and below 65 years of age. We are also advancing combination programs of SERNAs to extend intervals and protect Leqvio in the long run. Patents for Leqvio extend to 2036 to 2038, giving us a long runway if we can navigate the situation." Redburn analyst Simon Baker inquired, "What is driving physician inertia and getting more prescribers on board for your product? Is it related to the profile of the product, waiting for more data, buy and bill, or Part B?" Vas Narasimhan replied, "Thanks, Simon. We've seen a surprising number of physicians filing for reimbursement for Leqvio under the pharmacy benefit, which can lead to rejections or hassle. To avoid this, we're educating physicians on the buy and bill system. Once they understand it, they often expand quickly from 2 patients to many more. We underestimated the challenge of getting enough offices to convert, but when they do, we see a big runway for this product. We need to work through this hurdle over the coming months." Stifel Financial Corporation analyst Eric Leberigod inquired, "How can the company reconcile the second consecutive raise in full-year guidance, given that it would result in 8 to 9% growth in 2023, double the expected range of growth for the next 4 to 5 years?" Vas Narasimhan replied, "Thanks for the question. We are confident that our brands Pluvicto, Kisqali, Iptacopan, Leqvio, and Scemblix have the potential to outperform our 4% sales growth outlook. We maintain this outlook based on current performance, but we aspire to do better. Our success will depend on the continued trajectory of these brands." Harry Kirsch replied, "The 5-year CAGR is more difficult to increase than the 1-year. Our financial planning indicates that Entresto's contribution to current growth will be lower by the end of the 5 years due to our mid-25 forecast assumption. We outlined that if we are able to keep Entresto in the US longer, the 4% CAGR could reach 5%. We are currently in that range, and if Pluvicto, Kisqali, Kesimpta, Scemblix and continue to exceed expectations, there is potential for overperformance." HSBC analyst Rajesh Kumar inquired, "Could you provide us with more insight into your capital allocation strategy, particularly in regards to acquisitions in light of the current economic uncertainty?" Vas Narasimhan replied, "Yes, absolutely. We are focused on mid-stage and earlier deals, such as the $3 billion bolt-on acquisition of Chinook. We are mindful of potential IRA impact and are looking for assets that have manageable patient populations, such as Charcot-Marie-Tooth and cystinosis. We want to ensure that we acquire assets that are in our core therapeutic areas or platform technologies, with adequate risk-reward and de-risked from basic science, without overpaying for fully valued assets." Exane BNP Paribas analyst Richard Parkes inquired, "What is your latest thinking on expected first generic launches for Promacta and Tasigna in various territories?" Vas Narasimhan replied, "Yes, there has been no change to our expectations for Promacta and Tasigna. We are continuing to pursue patent protection for Promacta in order to extend its exclusivity. Our guidance for both Promacta and Tas remains the same. Operator, that will be our last question. Bank of America Merrill Lynch analyst Graham Perry inquired, can you provide an update on the timing of the PSMAfore data and the potential for ESMO? Additionally, what is the likelihood of seeing a statistically significant OS benefit from NATALY this year? Vas Narasimhan replied, thanks, Graham. We are confident that our data will be accepted by the various congresses and we anticipate a possible OS benefit given our 0.76 event rate. We hope to demonstrate a compelling OS benefit compared to our competitors. We plan to deliver strong performance for the second half of the year, including executing on the Zondas spin, initiating a share buyback and providing updates on clinical trial data. We appreciate your interest in the company and will keep you updated as we progress.